Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. A Japanese credit rating agency affirms the Philippines' A- rating, citing strong growth, low debt, and resilience to external shocks. The Marcos administration is reviewing the impact of a House-approved 200 peso wage hike amid warnings from business groups on costs and job cuts. Tesla stocks tumble as Elon Musk clashes publicly with U.S. President Donald Trump in a high-stakes war of words. Wall Street struggles for direction overnight as a slide in Tesla shares overshadows hopes of a breakthrough in U.S.-China tariff talks. Tesla drops sharply as the feud between CEO Elon Musk and President Trump heats up after Musk criticized Trump's tax bill for cutting EV incentives. Trump fired back, saying Musk is just bitter.
In getting unemployment this morning, the number was okay. Most importantly, ongoing claims was stable, but we're certainly off our lows. And so we might say we see tiny cracks there to be keeping an eye on. And then we got U.S. non-farm productivity, meaning how much output are we getting for hourly workers? And that too might have started showing a little bit of a crack. It was reported down for the first quarter originally by 0.8%, and today was a revision down 1.5. That was a real surprise. We didn't expect a revision. So together, we have slightly less people working, and we have the people working being slightly less productive. Those are both early signs to keep watching for what our economic growth can look like in the future.
The Dow Jones slips 0.25%, the S&P 500 falls 0.5%, and the Nasdaq drops 0.8%, weighed down by, of course, tech stocks. In Europe, the FTSE 100 edges up by 0.1%, the DAX rises 0.2%, while the CAC 40 slips 0.2%. A Japanese credit rating agency affirms the Philippines' A- credit rating with a stable outlook, citing strong domestic demand and macro stability. The Japan Credit Rating Agency says the Philippine economy is poised to grow in the upper 5% range in 2025, driven by resilient consumption, low external debt, and healthy foreign exchange reserves. In response, Bangko Sentral ng Pilipinas Governor Eli Remolona Jr. welcomes the rating, saying it will help attract more Japanese investments and boost business confidence. Finance Secretary Ralph Recto, meanwhile, says that the affirmation validates the government's road to a strategy and underscores investor trust in the Philippines' fiscal management. The Philippine economy is seen falling short of the government's 6 to 8% growth target all the way until 2031. That's according to the World Bank's new Country Partnership Strategy, or CPS, which outlines a more modest long-term outlook. The multilateral lender sees GDP growing just 5.3% this year, gradually climbing to 5.9% by 2031, still below official targets. The World Bank warns that global uncertainty, including escalating trade tensions, could drag on domestic growth. It adds that heightened risk could spur capital flight and shake up financial markets, posing challenges for investors and policymakers alike. Support from the United Nations rises to nearly $140 million this year, signaling strong global backing for the Philippines' development goals. The UN says its 2024 expenditures in the country climbed from $122.6 million last year, marking a significant jump in funding. The funds backed programs on human development, inclusive economic growth, and environmental sustainability. The UN notes that political and economic gains in the Philippines are driving transformation, prompting the organization to align its support with the country's evolving priorities. The U.S. is soliciting new trade offers, and the Philippines is ready to deliver. Washington has asked key partners to submit proposals on market access, including tariff and quota offers for U.S. industrial and agricultural goods, set with a deadline for June 4. Special Assistant to the President for Investment and Economic Affairs, Frederick Go, who recently held trade talks in Washington, is leading Manila's pitch and remains in constant communication with a U.S. trade representative. Philippine inflation drops to 1.3% in May, the coolest in over 4 years. As Sujin Kim tells us, rice prices remain a key driver.
Philippine inflation slowed to its lowest level in over 5 years this May. Headline inflation fell to 1.3%, marking the lowest print since November 2019.
This is the lowest in the last 66 months.
This is the fourth straight month of disinflation, according to the Philippine Statistics Authority. The drop was driven by slower price increases in electricity, water, and housing, coupled with further declines in rice prices. Rice inflation plunged to negative 12.8%, with prices ranging from 43 to 60 pesos per kilo nationwide. PSA says negative rice inflation could persist throughout the year.
Ito ay negative na since January of 2025. So buong yung 5 months of 2025, puro negative na yung ating rice inflation. May mga expectations na tuloy pa rin itong negative in the coming months kasi nakikita natin na yung prices of rice ay talagang bumababa na yung kanyang price per kilo.
However, price pressures remain in several essential food items. Meat inflation climbed to 7.9%, while fish, seafood, and other proteins also registered upticks.
Meat basket natin ay tumaas 7.9% ngayong Mayo 2025 because of the prices ng pork. In particular, pumasok din yung fish and other seafood.
The May inflation print was consistent with Bangko Sentral's forecast range. The BSP notes that risks to the inflation outlook remain balanced, with upside risks from potential hikes in transport fares, meat costs, and utility rates, and downside risks from weaker global demand and lower tariffs on imported rice. This further strengthens the case for a potential easing of monetary policy in the coming months as the BSP balances price stability with growth support. Sujin Kim, Billionaire News Channel.
The Agriculture Department plans to cut the price cap on imported rice to 43 pesos a kilo, down from 45 pesos as the government steps up efforts to tame inflation and protect purchasing power. Agriculture Secretary Francisco Tu Laurel Jr. says cooling rice prices were a key driver behind May inflation's drop to just 1.3%, the lowest in over 6 years. He says that the move will be supported by an expanded rollout of the 20 peso per kilo rice program, a flagship promise of President Marcos aimed at food security and cost of living relief. The DA expects these efforts to anchor inflation through at least August, giving policymakers more room to cut interest rates and sustain the economic growth momentum. The Energy Regulatory Commission is cracking down on power plants running below capacity, warning that this could strain supply and fuel higher electricity rates. The ERC gives 22 generation companies, including San Miguel, Meralco, Aboitiz Power, and First Gen, just 7 days to explain persistent derating or operating below maximum output. Chairperson Mona Lisa de Malanta says this underperformance threatens energy security at a time when demand is rising and power costs remain a key inflation driver. Utilities must submit recovery plans to restore full capacity or risk sanctions. The move comes amid growing pressure to ensure a reliable and affordable power supply, crucial for business confidence and long-term economic growth. Power rates for June are still up in the air as Meralco awaits for final charges from its suppliers before announcing the new rate. The company warns that there could be a slight increase in transmission charges because of higher costs in the power reserve market. But Meralco hopes that generation costs will hold steady and says lower wholesale electricity prices could help balance things out. The good news, a 19.96 billion peso refund approved by the Energy Regulatory Commission is still in effect, and that should soften the blow for households. In May, customers saw a 75 centavo drop in power rates thanks to lower generation and transmission charges. Now, as expected, business groups slammed the House-approved 200 peso wage hike for the private sector workers, warning of job losses and higher costs. Sujin Kim has the details.
The 200 peso daily wage hike just cleared Congress, but it's drawing sharp criticism from the business sector. The private sector is raising red flags, warning that a legislated pay increase could do more harm than good. triggering price spikes, job cuts, and a blow to investor confidence.
Yung maganda na pakinggan yan, tataasan ang sweldo ko, no? Konti lang yung apektado, paruso sa iba yan.
The Employers Confederation of the Philippines was first to raise concerns, calling the bill a burden on the broader economy.
It's good news for a minority of our workers, but bad news for the super majority of our workers. Because out of the 52 million workers, ang mabe-benefitan lang yan is 10%. No? And the 90% will acquire all the harm it will do in inflation. Magtataas ang presyo yan para mahabol nila yung tinaas na sweldo. Kung hindi nila kaya ng merkadong bilhin na, magbabawas ng tao yan. Tapos yung mga investors natin na naghihintay mag-invest, matatakot na rin. Kulelat na nga tayo sa investment, lalo ba tayo magiging kulelat?
MSMEs provide the biggest number of jobs in the Philippines, and this abrupt legislation by the House of Representatives would be a challenge at this time. SMEs in the Philippines today, MSMEs are struggling with a weak economy, with high prices, and the global situation is very unstable. The global situation is very unstable, so we should be more careful with moves like this.
The Federation of Filipino-Chinese Chambers of Commerce and Industry stressed that wage rates should be set by tripartite boards, not Congress, to reflect a balance of worker, employer, and government interests. On the side of the Financial Executives Institute of the Philippines, or FINEX, the group is calling on lawmakers to prioritize lowering costs rather than imposing a direct wage increase. Anvil Business Club also reiterated its position. Instead of raising wages, the government should focus on reducing the cost of living.
The government should ideally assist the workers and wage earners by lowering prices of basic goods, lowering the prices of food, lowering the prices of electricity, lowering the cost of housing, rentals, transportation. If all these factors could be lowered or stabilized, there won't be need for non-stop wage increases.
Meanwhile, according to the Philippine Statistics Authority, the 200 peso legislated wage hike could push inflation upward, particularly in the services sector. Sujin Kim, Billionaire News Channel.
The Marcos administration is studying the impact of that House-approved 200 peso wage hike, the first legislated pay increase in 36 years, amid warnings it could hurt businesses and fuel inflation. Labor groups celebrate the move as a long-awaited boost for workers nationwide, but business chambers caution it could lead to layoffs, price spikes, and financial pressure on small companies. Malacanang says it will consult stakeholders and wage boards before deciding whether to sign the bill into law. Lawmakers have until June 13th to finalize a unified version from both houses.
Hindi pa po natatapos sa Senado ang usapin na yan. At katulad po ng sinabi ng ating Pangulo, titignan po ang anumang economic implications patungkol po dito. Pero nais po ng Pangulo na maibigay ang nararapat at mas makakabuti sa manggagawang Pilipino.
With just days left before Congress adjourns, senators are weighing whether to stick with their original 100 peso daily wage hike bill or adopt the House's new 200 peso version. Senator J.V. Ejercito says talks are ongoing, including a possible compromise at 150 pesos, but stresses the need to strike a balance.
With the rising prices, with the inflation at present, sa tingin ko, kinakailangan na talaga magkaroon ng wage hike. Be it 100, 150, 200. Kung ano po yung kayang ibigay na po natin.
Senator Joel Villanueva, who chairs the Senate Committee on Labor, stands by the 100 peso increase as the most practical option for now. Deliberations continue amid warnings from business groups that a higher mandated wage could fuel inflation and threaten smaller enterprises. The Senate targets to finalize a consolidated version next week. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Friday morning. Right now, the Nikkei 225 is in the green, higher by 0.4%. Hong Kong's Hang Seng Index higher by 0.3%. Shanghai's Hong Kong's Hang Seng Index is now down by 0.3%. Shanghai's composite is lower by 0.1%. Things are changing really fast. And Singapore's Straits Times Index is flat with a slight upward bias. Here at home, Philippine shares ended flat Thursday as investors locked in gains despite May inflation cooling to a 5-year low. The PSE index closed nearly unchanged at 63.77, with sentiment still cautious amid weak trading catalysts. Value turnover came in at 6.3 billion pesos, below the average for the week. Now today, the Philippine Stock Exchange trading is closed in observance of a Muslim holiday. Now, the Philippine unemployment rate climbs to 4.1% in April, a setback for household spending and the broader growth story. Latest PSA data shows joblessness ticked up from 3.9% in March and 4% in April last year, signaling persistent weak spots in the labor market. The drop in employment hit key service industries, including manufacturing, food and hospitality, entertainment, retail, and other services. With consumer spending driving Philippine GDP, analysts say these labor market signs could slow momentum and put pressure on policymakers to support job creation and domestic demand. Another digital push in Philippine finance as CIMB Bank teams up with Dragonfly to bring stock trading straight to your phone. The tie-up lets CIMB users buy and sell Philippine stocks through the bank's app, powered by Dragonfly, a brokerage backed by billionarios Injap Sia and Tony Tan Catyong. It also works both ways. Dragonfly clients can now tap into CIMB's high-yield savings products, blurring the lines between banking and investing. The two firms plan to offer margin financing soon, giving users more leverage in the market. This comes as competition heats up in digital finance, and just weeks after CIMB was named the Philippines' best digital bank despite earlier hiccups. The partnership marks a new frontier for retail investing, with banking, brokerage, and borrowing now merging on a single platform. Toyota Motor Philippines starts 2025 on a strong note, reporting solid earnings driven by the return of the iconic Tamaraw and accelerating its shift toward electrification. Our mobility correspondent G. Baroga has the details.
Toyota Motor Philippines of the billionaire T family is off to a roaring start this 2025, raking in over 6 billion pesos in consolidated net income for the first quarter, a 57% jump from last year. The boost came from a 12% rise in retail sales, with over 55,500 vehicles rolling out of dealerships. And guess who's helping drive the momentum? The much-anticipated return of the Tamaraw. Relaunched in December, the iconic nameplate is proving to be more than just a nostalgia trip. It's a key growth driver for Toyota. President Masando Hashimoto even called it a worthy contender to Mitsubishi's L300.
We are increasing newly this product and volume. Mitsubishi also staying very strong. So these two are driving the whole customers, and then total truck customer segment is also increasing. So our product is incremental, and our level is almost head to head.
Alongside the Tamaraw, local favorites like the Philippine-made Vios and the Hilux pickup are keeping sales solid. Imported heavy hitters like the Land Cruiser, Hi-Ace, and Alphard are also adding to the numbers.
Toyota is also shifting gears toward a greener future. Staying true to its multi-pathway approach, the company ramps up its electrification efforts in support of the country's decarbonization goals.
That green push is showing results. Its luxury sibling Lexus is also cruising ahead in the premium lane, grabbing the top spot in Q1 thanks to a hybrid-heavy lineup.
95% of our vehicles are all hybrid vehicles. So it's the demand of the market requiring hybrid vehicles for fuel efficiency and of course exemption from number coding. So I guess people with before having budgets for two vehicles can now be combined into one.
Together, Toyota and Lexus posted a 37% year-on-year jump in electrified vehicle sales, moving nearly 4,000 units in just 3 months.
This growth trend is keep going and continuing in the future as well. So Toyota is bringing more products to the country, and we want to make the carbon neutrality options, more options to the customer. That's our Toyota's promise.
But even market leaders feel the seasonal slowdowns. April saw a bit of a breather with sales dipping across the board. Toyota sold just over 16,000 units, an 8% drop from March. Lexus says it's a sign of a more cautious market as more players enter the field and buyers take their time.
There are more vehicles or more brands out there that people can choose from, different price ranges, different sizes. Also, I think the market is more conservative this time because there was a lot of high sales coming from 2024.
Still, Toyota's dominance remains undisputed. With nearly 72,000 units sold from January to April, the brand holds a massive 48% market share. One reason for that edge is a dealer network that spans the country.
We have currently 75 3S showrooms in the network, which is the biggest across the brands. Even in any province or region, people can have the access to the dealers and get the repair.
Despite the April dip, both Toyota and Lexus are staying optimistic, projecting 7 to 8% growth for the Philippine auto industry this year. For BNC Mobility, G. Baroga.
We're taking a short break. Business 360 will be right back. Welcome back. House leaders are brushing off Senate President Cheese Escudero's accusation that they're taking orders from Speaker Martin Romualdez to push the impeachment of Vice President Sara Duterte.
Kanya-kanya po kasing districts, hindi naman po magiging seasoned politicians yan kung the mere na susunod na lang po sila sa isang batas. Kailangan po ang desisyon natin at the end of the day nanggagaling po sa mandato ng taong bayan.
Several Manila lawmakers say they hardly even see Romualdez insisting that the impeachment drive is based on constitutional duty, not personal or political loyalties. The defensive stance highlights the deepening rift between the House and the Senate just days ahead of a potential impeachment trial that could shake the country's political landscape. In the meantime, the allies of Vice President Sara Duterte say an impeachment trial may never even see the light of day at the Senate. Senator Amy Marcos claims some administration lawmakers are quietly moving to kill the case, adding that even if it goes to trial, acquittal is a strong possibility.
Mismo yung admin, sa palagay ko, interesado na mawalang bisa na yan kasi kinakabahan din na matalo. Aminin natin. Wala na talagang panahon para sa trial. Dapat ibasura na kung gusto talaga ng House of Representatives. Wala namang problema. Pwede silang magpila ulit subject to the 1-year ban. That seems very, very clear to me.
But Senator J.V. Ejercito disagrees, insisting the Senate is duty-bound to convene as an impeachment court.
Nanghinayang ako doon sa momentum, no, with the biggest mandates ever received by both the President, the Vice President. We were off to a good start. Ang ganda ng goodwill. Kaya lang napaaga yung bangayan na ito, humantong na nga po tayo sa magkakaroon na ng impeachment.
These split views underscore growing political uncertainty as the nation watches whether the impeachment move against Duterte escalates or unravels in the upper chamber. Now, a constitutional law expert warns that the Senate cannot simply dismiss the impeachment case against Vice President Sara Duterte without holding a full trial. Speaking to on Billionario News' agenda, Attorney Mel Santamaria said the Senate is obligated to act as an impeachment court and must evaluate if the charges qualify as impeachable offenses. He stressed that any shortcut, like dismissal without trial, would undermine constitutional process and set a dangerous precedent.
Hindi ka agad-agad pwedeng ibasura ang inihain ng articles of impeachment. Dapat magkaroon ng paglilitis at paghahatol.
On another front, a lawmaker says it's time to require Meta, the parent company of Facebook, to secure a congressional franchise to operate here in the Philippines. Surigao del Sur Representative Johnny Pimentel raises the idea after Meta allegedly refused to take down fake content on its platform. He argues that Meta earns from Filipino users but pays no local taxes, and that the government has been too lenient in only calling for self-regulation.
So, it's about time siguro. If they cannot have self-regulation, it must be this government, this administration, tayo mag-regulate sa kanila. And that is why, Mr. Chair, I think we should really study if I don't know if it is possible that we should require this Meta to get a franchise from Congress for them to operate here. Kasi may oversight committee ang Congress, we can regulate them.
We're taking a quick break. Business 360 will be right back. Welcome back. U.S. President Donald Trump and tech billionaire Elon Musk are in a full-blown feud with political and economic shockwaves. Trump said he's disappointed by Musk's public criticism of his tax cut and spending bill, a centerpiece of his agenda.
But I'm very disappointed because Elon knew the inner workings of this bill better than almost anybody sitting here, better than you people. We want to have cars of all types. Electric, we want to have electric, but we want to have a gasoline, combustion. We want to have different. We want to have hybrids. We want to have all. We want to be able to sell everything. And when that was cut, and Congress wanted to cut it, he became a little bit different, and I can understand that. But he knew every aspect of this bill.
But Musk fired back on X, claiming he never even saw the bill before it passed, quote, in the dead of night, with most of Congress unable to read it. Trump on Truth Social accused Musk of pushing an EV mandate that forced Americans to buy electric cars, quote, nobody wanted. He also claimed he asked Musk to leave his administration. And in a direct threat to Musk's empire, Trump says he's moving to terminate government subsidies and contracts with the tech mogul's companies. Musk quickly responded, tweeting that in light of Trump's statement, SpaceX will start decommissioning its Dragon spacecraft immediately. That very public feud between U.S. President Donald Trump and billionaire Elon Musk sends Tesla's stock plunging, wiping out $150 billion in value. Trump threatened to cancel federal contracts with Musk's companies after a heated exchange over tax policy, sinking Tesla shares by 14.3% in a single session. Wedbush analyst Dan Ives called it a junior high school battle, warning the clash could intensify even further.
It was a jaw dropper in terms of what we saw today, but no one thought that we'd be seeing Musk go so aggressively after Trump, and then Trump going so aggressively after Musk. Stark contrast to what we've seen over the last few months between these two. The fears is that this could sort of spiral into something much worse between Musk and Trump.
The spat erupted after Musk criticized Trump's tax cut and spending package, calling it a threat to America's long-term fiscal stability. Despite the market reaction, Ives says Tesla remains on track to become a $2 trillion giant if it can navigate the political fallout. Now, Chinese President Xi Jinping says dialogue and cooperation, not confrontation, are the right path for the U.S.-China relations. In a phone call initiated by U.S. President Donald Trump, Xi stressed that both sides must jointly steer ties in a correct direction amid rising global stakes. The call comes days after trade officials from both countries met in Geneva, a move Xi describes as a key step toward resolving disputes through consultation. Xi also said that China will deliver on its commitments and urged Washington to follow through on the Geneva Agreement. Trump, for his part, says he wants the Chinese economy to thrive and believes the two economic giants can achieve great things together. On another front, the Trump administration slapped sanctions on 4 judges at the International Criminal Court, escalating tensions over war crime probes. Now, Washington says the move is in retaliation for ICC cases targeting U.S. troops in Afghanistan and for issuing an arrest warrant against Israeli Prime Minister Benjamin Netanyahu. U.S. Secretary of State Marco Rubio accuses the judges of illegitimate actions against America and its ally, Israel. The sanctions freeze assets, block travel visas, and extend to the judge's family members. The ICC fires back, calling the U.S. move a direct attack on global justice and an attempt to intimidate an independent court that seeks accountability for atrocities. Elsewhere, Sierra Leone vows to fix visa overstay issues after being slapped with U.S. travel restrictions under President Trump's latest immigration order. The West African nation is among 7 countries facing partial entry limits, while 12 others are fully banned from entering the U.S. starting June 9. Information Minister Chenor Ba says Sierra Leone is working with Washington to address unusually high visa overstay rates, especially among students and visitors. The move is part of Trump's broader immigration crackdown, which he argues is crucial to national security. Sierra Leone says it's taking urgent steps to regain full travel access to the United States.
We welcome the fact that it's not a ban on Sierra Leone, because they have made clear that the category that we are in, if you currently have a visa, you can still travel to the US. If you're a legal permanent resident, you can still travel to the US. For official purposes and things like that, you can still travel to the US. And the secondary parties as well, there'll be a review in 90 days. We hope that the engagement that we'll have, very proactive engagement with our US partners, will ensure that at the end of that review period, when an updated list comes out, Sierra Leone will not be on that list. That's all we can do as a country, and we're absolutely committed to doing that.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us. Keep it here on BNC, the Billionaire News Channel, and have a good long weekend.